Hi, welcome back to Exploring the Process. We've got episode 5, I believe it is, and we got a really special guest here. We're going to be talking crypto, Hedgeye, obviously, and how Scott and Chris really found or applied the Hedgeye process to the crypto boom and now somewhat bust here going into quad 4. But we've got Scott Lusick. And he was one of the founders, or was the founder of the Facebook group that's called Learning the Process. So kind of it's a special guest. He's been trying to help out Hedgeye Nation for a long time. I'm not sure when was that group founded, Scott? It's been a few years, right?
It was March 2020, believe it or not.
Okay, all right.
So of COVID, yeah.
So about two years, which is
yeah.
awesome. And Scott actually hosts a bi-monthly gathering on Monday nights. For those, it's a Zoom call. So it is a private group, but if you are part of Hedgeye Nation and whatnot, or just interested in kind of learning more, please feel free to try to sign up and join those calls. We had a great call last Monday, Scott. It was a lot of fun to be part of that, and I certainly do my best to sort of join when I can. But anyway, we're going to get into it here. It's going to be as I said, it's going to be a fun one because it's going to be a new topic. So again, I'm an absolute newbie in terms of crypto. I didn't actually even participate in the quad 2 ramp up. So this is going to be a lot more kind of Scott and Chris discussing sort of what attracted them to that space, how they tackled it, and that kind of thing. So Scott, I guess kind of one of the first questions we always do is, how did you find Hedgeye? What's the process been like? Some and that kind of thing over the last few years.
Yeah. So I mean, I think
welcome. Yeah.
Thanks, Robert. So I think one of the things that actually probably distinguishes me from other guests is that I'm not a finance guy. I'm not a math whiz like Joe, who's playing with your
fractal ranges
of markets. I mean, I've read it, but I don't understand it. But no, so I kind of come from this from a kind of a beginner's learner's point of view, which has some disadvantages, has some advantages. But really, basically, I mean, I not to get too far down, but I started at a place where I had almost no investing experience at all. Like my investing experience was literally like, what mutual fund do I pick out the back of the Globe and Mail? This one's done well last year, I'll buy that one. I'm a value guy.
To throw in your RSP, right?
Yeah, exactly. Like literally, I thought value. I was like, okay, I like value. Like I like getting something 20% off. Like that's like, I mean, I know that sounds funny now, but like it's about humility, right? Like that's where I was, right? But I got to a place in my life where for the first time I had a significant amount of capital to play with, but I was totally uninvested. And that was like a scary thing, right? Mm-hmm. So, when the first time you're playing with live ammunition, and as you get a little bit older in your life and there's a little bit more of a nest egg you're playing with and there's other people depending on it, whoever it is, for me, and so that was kind of around 2020. And so I started doing what everyone does, kind of the old wall thing. I have some portfolio managers in my family. And so we were kind of doing some stuff like that. But very quickly I realized like something's amiss here, like when
do I really need to be long all these junior gold miners and silver and copper plays? As Canadians, it's like as Canadians, a lot of our, we have a lot of focus on the mining.
Well, in the fee structure, right? You start to learn more about it, right?
Suncor, all that kind of stuff, right?
And like one of my first investing experiences actually, and this is going to date me, but one of the first investing experiences I had was the McGill University Investing Club in 99 to 2001.
All right. So, I mean, we might need to cancel this interview right now. All right. I'm a Queens guy. So,
no, but I mean, I bought the top of the tech bubble, and so.
Oh, you did, eh? That's amazing.
Yeah, absolutely. I was, it was going to the moon and, but that was all to say is that I think that all those experiences when you get a little bit older was like, you can either complain about the results, or you can start to do something about it, right? And I think that's really where I was at. Like I wrote this down because one of the quotes that I always remember, the guy named Jim Rohn, he wrote, if you divided all the money in the world equally among people, pretty soon it'd all be in the same pockets. And similar, if you want to have $1 million, you better learn to be a millionaire when you have $1, right?
Yeah.
And I think that kind of thinking is in a way what Keith's all about, right? It's about anyway, so in 2020, I kind of had this chunk of capital the first time I was going to deploy. Super scary, quite frankly. And then my journey was actually through to Hedgeye was through a guy named Steve Soretsky, who I'm not sure if anyone knows. He's a Canadian guy, does macro. He's actually presented on Real Vision. So he has a pretty big YouTube following, but he combines the always exciting Canadian real estate market with macro. Speaking of bubbles,
I was gonna say, especially a guy living on the West Coast, right? We won't give it away too much, but there's a decent amount.
It's gross. Yeah, it's gross. I think for some context, for people who don't know, I think in Canada we're now at the average home is something like 15 times the average annual income gross. So we're far beyond. Anyways, we're far beyond any metrics that make sense.
It's pretty absurd.
Yeah, it's pretty absurd.
Yeah. So is this the permanently high plateau, right?
Well, that's a really interesting question. Like, well, if it's perpetual, is it a bubble? Like, if it's your point, and I think that's a question we have to ask ourselves now that M2, has increased 40% in 18 months. But anyways, I didn't realize that. But long story short,
we're gonna dive this from a crypto discussion to a real estate discussion. Right?
No, but long story short, and then classic. I think my route was through Real Vision, Raoul Powell's interviews with Keith, and then like a free macro show. But then I think this is trying to get back to the origin of the group is coming from someone who was buying value because they thought that was like a quote unquote good deal, and like that basic level of like understanding of what's going on, right? To the tools that Keith gives you, especially as someone who is not a finance person, who doesn't have a CFA, who doesn't have a math brain, it's a lot. Like it's a lot, right? Like it's a lot, right? The notebook,
it's not like you're again, I don't want to be like dumb, but I mean, you've gone to school, you're a successful professional, right? It's like, it's not, you deal with complex situations on a regular basis, but then this is just in a whole nother bucket, right? In terms of,
for sure. I mean, no, absolutely. So, and that's the origin of the group, was just some chatter, not unlike some of the stuff you've done, Robert and Chris, to be honest, on Twitter. And it just started, you guys want to start a group, and Facebook isn't necessarily the ideal platform because it actually excluded some people who I wish it didn't exclude, quite frankly. But we made a conscious decision that Facebook actually provided the best possible tools for the type of interaction we wanted to do. Unfortunately, we tried Slack, we thought about Discord, but so we're on Facebook, but we're potentially going to move into do some more stuff on Twitter. But so we're on. So if anyone wants to join, I got to put in the link, but we're just my Twitter handle has it. So the group just started pretty organically, quite frankly.
That's awesome.
It was just a bunch of people who were trying to figure it out, and we had all sorts of different levels. We had some people, like I know you had Joe on before. Joe's been kind of one of the key members, and one of the best things I think about it is the amount of tools that we've developed, and maybe we can go into some of that when we go into the crypto stuff. But some of the bridge bands, some of the indicators on TradingView. All that, because sorry, go ahead.
No, I was just because I kind of basically discovered Hedgeye about the same time, right? It was like March of 2020 and whatnot. And I remember joining around then, and that's kind of when I actually discovered Joe, because he was posting a couple of things and he shared. And there's a lot of folks that have shared, Excel sheets, their way of tracking the risk ranges. There's a lot of obviously, I mean, Hedgeye Nation in general is just such an open, very, big open arms. I mean, everyone, for the most part, everybody's willing to like lift each other up, right? And so it's a wonderful community, first of all, and second of all, that group was really, especially at the early days, was like, wow, like this is amazing. Like everybody, again, it's just like these folks created these Excel sheets or Google sheets, like you, Chris, right? I don't in terms, and then just like sharing them for the masses to consume and to help leverage, and it's a great way of yeah, just a great way of kind of, whether it works into your process or not, right? If you start incorporating that, wonderful. If it's not, then, you can kind of just take pieces of what somebody's providing and apply it to whatever makes sense to you, right? So, yeah, it really was. I was really blown away, because I was like really within the first probably 2 or 3 months that I basically joined Hedgeye, and I discovered that Facebook group, and it was really awesome. Yeah.
Yeah. Well, no, it's awesome, and thanks for joining and promoting it and stuff. And one of the things is that I think there's an amazing like personal aspect to a lot of the stories behind this stuff, and I think that's an important thing to acknowledge too. I think a lot of people are doing this because they've lost half their net worth before. There's stories of people who, not to identify anyone, but that have shared in the group, they've lost 50% of their net worth 3 times.
Wow.
Do you know what I mean? So like but this is personal, right? Like, yeah, this is we talk about your friends, family, your charities, all of that, right? And I think that there's also an emotional aspect to doing what we do, right? Like sometimes Absolutely. I joke that our Zoom call is like a therapy session for, and it is, right? And that's okay, like, because this is hard. You're sitting there, you're pressing buttons, but you could lose a whole, a year's worth of salary in a month, Yeah. And we have kids, you have family, you have other things like that is, so I think part of the group is about that as well, because it's lonely, when you're sitting there, like maybe it's on the can at a break or whatever, and you're trading, you're like, oh my God, I just lost my whole day's salary in one trade. Like, or I fat thumbed the wrong button, so like,
right?
As a non-stocks guy listening into the Twitter spaces, I can definitely tell where the S&P is. within about 10 minutes of the Twitter spaces, I'm like, all right, the S&P is down today, all right.
Yeah, exactly. It's too funny, but yes, that's
kind of the background, to be honest, of the group. I mean, I'm not sure how much you want to go into, but I guess all I'd say to anyone who's listening is you're more than welcome. It's not just Hedgeye people. I mean, we love Hedgeye people. We're a Hedgeye first group, but we're pretty welcoming.
Yeah, absolutely.
Yeah.
And then I guess, what started attracting you to sort of more of the kind of like the cryptocurrency world, whether it's Sure. Bitcoin or the other kind of the asset, we won't say shit coins per se, but the various the various components of kind of the of that world, right? I mean, from a guy who went from looking at or basically investing value stocks in his retirement account to, right. or I should say value mutual funds, which is even more even more old wall.
Make all the mistakes early.
Yeah, exactly. To not necessarily going the complete 180, but I mean, then getting interest into the into that space. I mean, how did that kind of transition?
Yeah, so I mean, I think for me personally, like I have a small little tech company that I run, so as a side hustle. So that's kind of my into tech world. So I'm often going to conferences, stuff like that. I've literally been at this is a funny story, but in 2000, I think it was 16, I remember going to a Bitcoin conference in Vancouver, and I think there was like 4 people. Like it was like the most cringy. I was like, I got my little thing. I'm like, oh, woo, Bitcoin. And there's like, I was like tapping on the hello, like half the people were probably thought that they were at like the guiding convention and they're in the wrong hall. Like, like, do you know what I mean? Like people forget, like that was Bitcoin in like 2016, 17, right? Like,
it was
probably a bit earlier, but
I mean, I remember, was it maybe 2014 or maybe in 2013? It was trading at like $40, $50, $60, something like that. Because I remember, one month, again, this is kind of a blue collar guy, was sort of a friend of a friend, and ex Marine, that kind of thing. Anyway, long story short, I mean, he basically, put a month's worth of paychecks into Bitcoin, and I was like, buddy, I don't know if you want to do that. And, like it was at like $40, ramped to, I think 400 at one point. I mean, he was like, Robert, this is the best fucking thing ever. and he was lucky that, he basically just he was not a hodler. I mean, he was very much like, this thing just returned me, whatever it was, even if it was just $100, he'd be like, all right, I'm taking some off the table. Anyway, he was very, 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 very good about it. But yes, I mean, I definitely have had my eye on it for a number of years. I've just never really played in that space before.
Yeah. So, I mean, think maybe, so maybe one thing to do, and Chris, if you want to jump in, but maybe one of the things that I think is helpful to do is to actually talk about the terminology around it.
Yeah, that'd be great.
I think the terminology is like really powerful. So the basics is the technology, right? So the innovation is a bunch of different technologies that were kind of combined into one, right? And that was Bitcoin in a sense. So, but Bitcoin is the key technology is just blockchain, right? In the same way that HTTP or other protocols for the internet, it's like a basic layer, right? So, but then within that, there is, I personally actually think that the term cryptocurrency confuses a lot of people and is actually kind of lazy, because within that you have crypto, actually like currencies that are meant to be stores of value and means of exchange. Mm-hmm. But then you have this whole other world of layer ones, which are allowing you to store value, but also program it through smart contracts and to create all these new ways. And I think this is the critical part for macro people. It's new ways of organizing capital.
Right.
And that, like, I think that should be like the full stop for people, right? It disintermediates traditional third parties who, like banks, like Swift, all of that, and that's what's happening. So I think that's
what actually attracted me to Ripple originally. Now again, I mean that was like back in probably 2016, to be honest, maybe 2017, right? Was the disruption component of a very critical piece in the world of banking, really, right? Now again, 5 years later, they've gone through all sorts of ups and downs, but even, the other great thing too is, to me, it was like, okay, this is a pretty cool Canadian company or Canadian, duo or what have you. But yes, I mean, that to me is a huge component, right? And even today, the ones that I'm interested in and looking to basically start to invest in, kind of like as we get into the deeper quad 4 at better pricing, are the ones where I consider, or kind of from some due diligence, is the folks that have like basically an anchor or something that they're going to be, disrupting an entire like ecosystem or what have you, right? So again, I'll just, Ripple's probably not the best example, but it's just the one that's on my mind.
No, it is a good example.
And then, but on the flip side of that, I know Chris, he was just looking at it from a pure, almost like a trading perspective, right? So I don't know, Chris, if you really even know much about any of the various cryptocurrencies other than, a very high level on the Bitcoin side of things.
I don't even know that. That's the
yeah.
For me, we talked about it briefly earlier. For me, it was the fact that everything that I'd learned over the last 4 or 5 years, I could put to work in crypto because I knew nothing about it, and that there was no bias, there was no company name, or there was no Greek government bonds. There was no bias. There was no preconceptions about what any of it was. And in order to try and keep it, I unfollowed anyone that talked about it. I unfollowed all of them, and I just didn't read anything. I unsubscribed from Real Vision. I was like, I don't want to know, because, and even one of my friends, his brother is in some shit coin in something, and I was like, we went go-karting, and I was like, listen, I love you. We've played football together for like 10 years. I get it, but I don't want to know, because the more you tell me, it just means I'm not going to trade your coin. Mm-hmm. Like, you telling me something isn't going to make me go and buy it. It's going to make me take it off of all of my spreadsheets so I can't see it, because I don't want this bias of all of the numbers, all of everything. This says buy or this says sell. I don't want to go, oh yeah, but Chris said they've got this new thing coming out in like 2 months. It's like, no, I don't want to know it. I don't care. I just want to look at the numbers.
Well, no, and I think that's a beautiful statement of like what the Hedgeye process provides, right? For sure. Because I think there's, I know personal stories, and this is all, telling tales out of school, but it's true. Like I know people who've lost massive portions of their net worth in the last four weeks, like massive, like enough to buy homes with. You know what I mean?
Yeah.
And the reason, and despite WhatsApp messages from me being like, you better fucking sell, for the reasons you just stated, Chris, they're in love with their whatever coin.
They're like, this is going to change the world, or whatever.
They fall in love with the story, right? And
there's one thing. There's one thing I think, although especially Bitcoin isn't much in love with Mike Green, but he said, one thing that he's learned from interacting with people around crypto is that for a lot of people, these coins, these are like their lottery tickets. Right. So if you try to so if you're there, if you're there trying to say, it's a piece of shit, you're basically you're downplaying their chance of getting out of whatever situation they're in. You're literally saying you may as well just throw your lottery ticket in the bin.
But here's the one problem with the numbers with all of that is that it has been the best performing asset in general in the past decade. Period. No one can debate that, right? And if you look at the rates of growth of adoption, we're somewhere about twice the speed of internet growth. I can if you guys want a screen share, I can show you some of that. But that's the conundrum. So I think okay. So well, do you want me to show it? I'll show some of that.
Yeah, you can show it. I think if you just hover over the little green. See here. That'd be great.
What do you guys see in there? No.
But I think, it is the beauty though, right? Because you can kind of take both sides of coins, and I kind of approach just investing in general with a little bit of both, right? So like kind of understanding the fundamentals helps me trade a little bit better, right? Because like I can narrow down a list of whatever 2,000 small caps and what have you, and then and take it to a top 50 or something, right? And then I can go from there and look at signal strength and review that kind of thing. So to me, I think I'm a bit of a hybrid of like between almost a little bit of both of you guys in regards to again, like I dug really deep into Ripple, and then but I haven't done much else. And I know Luna's a big one. Is it Mana as well, I think, right? Yeah. And then there's the other one that's Ardero. I don't know if I'm pronouncing that right, but no, it's not Ardero. It's
Algorand.
Thank you. Yeah. So like those are ones that have like stuck out to me in terms of interesting longer term optionalities. But again, I haven't dipped my toe into anything. But anyway, back to you, Scott, in terms of.
But I just want to say, I think Chris is right. Okay. So, and what I mean by that is I think that the way to trade these assets, to overlay the insights from the Hedgeye process to be unemotional, even when you do fall in love with someone or something, or you do like all that stuff, right? I think that is the difference, right? Like that is the difference between like, for instance, when crypto starts to crash, I inevitably will start DMing people being like, and seriously, because it's like, it's a big chunk of my net worth is there, right? You wake up and it's like, oh my God, right? We all have those emotions. So, but it's at that point where I always say, I either have a process or I don't.
Right.
Because it's easy when things are going up to say I have a process and I'll sell when it goes down. No, that's not how like the human brain works, right? It just doesn't, So for me right now, and I know from watching previous episodes or talking with Chris or hearing Chris, I think on some of the Twitter spaces, I had no problem now selling almost everything. And 2 years ago, before learning Keith and having him in my ear every morning and looking at the bearish trends break, there's no way I would have done that. I would have somehow convinced myself that like taking this loss was like for the crypto team, was for the whatever, and I'm not a bag holder, I'm a diamond hands, all this nonsense.
Yeah.
Right.
You got laser eyes.
But that's why I think I think the Hedgeye process with crypto is so powerful.
Absolutely.
Because you have an 80 vol asset that's also growing faster than anything's ever grown before. So all these powerful dynamics, right? But you can also lose everything really quickly. Like, so that's why having the discipline, seeing the macro, right? Because when you overlay the quad framework, the trade trend, it's like, it's obvious what you should do. You just have to do it.
Yeah.
Right.
I think I remember, Chris, I think you mentioned, didn't you have something where you didn't hold anything for longer than 20 days or something like
that? Well, one of my, one of mine's is based on entries on 20-day look back, 20-day forward returns. So it's more like if you've got a process that's based on something,
right,
you have to stick. I guess it's like the rules, you have to stick to it. If your edge, just in that particular scenario, if your edge is, I can get whatever, if I've got a 70% hit rate on this indicator and it's a 20-day indicator, then as soon as you go to 21 days, you've lost everything, because none of your back test is based on 21 days. It's based on 20 days.
Right.
That's more. It's not like, so it's.
Yeah. It was just more your process. Sorry. Yeah. I thought it was more of like a something that you stuck to, but it was more because it was just part of your process that you
just
executed.
On that. That particular part. Yeah.
But I think Freebird talked about this actually, Robert, on your space in a different way with respect to like tech stocks and the whole idea of things getting cheap. And he said, I think he said, like, I paid for medical school like 4 times over with the losses you learned. No, but
it was a great comment. Yeah, he was on fire. He was on fire
for this moment that we're in, right? Because like, we see like the Playboys of the world going down, the Aus, all of these PCT, all of these smaller like ones that the Hedgeye community, let's be honest, we're kind of in love with those ideas, right? We are, like, we all want Playboy to be the 100 bagger that McGough said it's going to be, or 10 bagger, right? But it's not there right now, so you can write it down, right?
or you can just revisit it. That's like $12. Yeah.
and I think the reason that Keith is always hammering on people is like, don't fall in love with things. I go anywhere, I'll short the things, and he's always making a point of that. It's because he knows it's so bloody hard to do it that you have to be told every day. Right?
Yeah.
It's not a coincidence where you're training the brain to do things it doesn't want to do.
I mean, his early look today, I mean, it was kind of a timely early look, even a macro show this morning, right? In terms of our conversation, and then tying it into crypto, it's like, you got to bang it over your head. You got to, don't fall in love with it, whether it's Luna or it's, Tesla, it's all kind of falls under the same thing, right? In terms of, okay, you might love the story. You might think that Tesla's going to change the world, going to have you give you a robot made in within 5 years. But between now and then, it might be up and down, 6 ways to Sunday, right? And same with a lot of the crypto assets.
So actually, I think this is actually a really interesting point to shift a little bit, which I think might be helpful to some people to get back to that point about organizing capital differently.
Sure.
So when everyone talks about crypto, they're talking about the spot price for specific coins, or most people. Yeah. Right.
That's how I think about it. Yeah.
Like that's what we're like as a starting point, right? Like that's what people are talking about. What's fundamentally different though is that like now, because of these layer ones, you can actually be involved in the quote unquote crypto space in this new world of Web 0.3 and organization of capital, but have none of the volatility of the spot price of the underlying assets, right? And that is a shift that we're all trying to make sense of right now, right?
Yeah, can you expand on that a little bit?
So I'm going to expand. Yeah, exactly. So for sure. So one place to think, I think it's easy to start is there are such things as crypto banks, right?
Okay.
So, and you can deposit / stake coins that are US dollar coins, that are Canadian dollar coins, so instantly none of the volatility of the spot price that we're all talking about and that we're all trying to manage is relevant, because you're actually subject to these coins depegging and all that nonsense about Tether. Like I have some really strong views about that, but the depeg risk is, I think, very low on stablecoins. And one of the things that people don't realize is you can actually buy smart contract insurance against depeg. So,
Okay.
and you can also buy smart contract insurance for the actual DeFi protocols not working as they should, right?
Okay.
So that whole thing that I just introduced is, I think, what people should also be really opening their minds to. There's a couple really powerful things that happen there. One is that the banks don't matter anymore. The bank, a bank as a place where you, or quite frankly, even traditional stock exchanges don't matter anymore. So all of that overhead, all of that old, like just kind of structure is gone.
Yeah.
So, and what that allows, when properly done, these crypto banks, and a lot of people are going to be screaming this is a scam, but we can talk about all that too. But let's just assume it's not a scam, right?
Okay. Yeah.
In theory, what that allows you to, what happens is so let's just say typical fractional banking, right? This is like basic, like you put in $10, the bank will then lend $100 on that 10. Right.
Mm-hmm.
That's what happens, right? Like that's, or they create commercial credit, like we don't deal, but anyways,
yeah.
But these crypto banks are doing the same thing, except there's no shareholders to pay out.
Right.
And there's no infrastructure. You can organize billions of dollars of capital with like a team of like 20 devs. And then,
is this where the yield because one of the last calls?
Yeah. So like some of the basic ones are like Celsius Network, BlockFi, as an example.
Okay.
The one that I think people should know about is in particular is the Anchor protocol on Luna.
Okay. Okay.
So the Anchor protocol, actually they just got capitalized with almost, I think it was like $700 million.
Wow.
Like yesterday.
Wow,
So
good for them.
And they're on about they self-capitalize too. So so this is serious money. And they have, I think they have about $11 billion in deposits. And
That's
what
amazing.
they're doing is within the Luna kind of DeFi world, they are the kind of the bank, right? So people can borrow money against it. They're fractionalizing it. They're taking interest, et cetera, right? But if you just want to be really simple, really basic, and this isn't financial advice, you figure it out yourself, but you can put in a UST coin, and right now they're paying out 19.6% interest on that.
Yeah. Yeah, I'm on their site right now, 19.54%. Yeah.
Yeah.
Yeah, that's crazy.
So
on five, call it five and three quarters deposits and 3.85 collateral. So 5.7 is heavy.
I thought it was a little bit more.
It's a total of like 9.6. But yeah, no, it's like it's
no, sorry, you're right, Robert. I was so the market cap of the UST stable coin is now 11 billion.
That's what I'm seeing here. Yeah, and that's awesome. Yeah, that's super cool. This is amazing. Yeah, so I just Googled Anchor Protocol. They have a whole dashboard for those that are.
Guess what Charlie Munger's.
If you're an absolute newbie like me at Google.
and on there, and this isn't, and again, this isn't financial advice. I'm not saying put all your money in this, but what I'm saying is that this whole crypto world is much more than the spot price.
Yeah.
It's much more. It's about a whole new way of organizing capital that is user driven, right? So for example, here's a good example.
So how does the borrow work? Sorry, Scott.
No, go ahead. Go ahead.
So how does the borrow work? So if you're staked here,
yeah.
Do I also have to have some like coin or like USD?
So the typical borrow there out of Anchor, and there's other protocols too, but the typical borrow is you buy Luna as your collateral, and then you can borrow UST off of it.
Got it. Okay.
And UST for everyone, that's US dollar stable coin, US Terra, but it's US dollar.
Right. Yeah. Yeah. And it's like, I mean, for the most part, just trades at $1, doesn't it? Or like it fluctuates very. It's like very
exactly.
Yeah.
And there's that one's actually quite interesting because the typical stable coin, the whole USD tether, the whole USDC scam is that, it's not backed one for one by cash in a vault, right? Like that's the whole, like, right? Like that's the
does it matter?
Well, exactly. So these ones are what they call algorithmic stable coins.
Okay.
So they're not even purporting to be backed by, treasuries or cash equivalents. What they do is their core asset is the Luna coin. And so whenever you buy UST, their US dollar stablecoin, you have to buy it with Luna.
Got it.
And then so
kind of like the NFTs, kind of like the NFTs where you got to buy with ETH basically, or
yeah,
like
exactly.
Ethereum.
And so it's actually burning the supply of Luna as the UST supply gets bigger. So it's actually totally deflationary. And with the algorithm is combining all those factors and the fluctuations in the market to maintain the peg.
Did you know any of this, Chris?
I try not to.
Yeah, so
I don't want to be rude. Like I don't mean to be rude. It's like
no, it's not rude at all. I don't know.
No, I just mean like
Yeah, no.
But okay. So here, Chris, let me just try something on for you because I think this will be good. So if you could, instead of having your savings making 0 or -% right? Let's say whatever it is. Let's say you keep in cash 6 months of your daily expenses, right? Or whatever it is, right? This protocol, the way it's done, because they're organizing capital in different ways, able to actually, as opposed to bank shareholders or bank staff, pay you 20% as opposed to almost 0%.
Yeah, but then to me, it's not the same.
Okay.
I get it. I'm not trying to promote it. If I have 6 months of cash, I have 6 months of cash. If there's anything attached to that already, okay, so I have 2 months of cash in my house. So already I only have 4 months of cash in the bank. So that's something I've already done.
Yeah.
But if you attach something to it, like some sort of interest rate, it immediately becomes not what it is. So if you're saying you've got 6 months of cash, but I've got it over here earning 20%, then you don't have 6 months of cash. You just don't.
Okay,
so well, because you consider that as
there's a risk.
It's like an
there's
asset.
a risk. There's a risk to you not being able to access it.
Risk profile to that. Yeah, that makes sense.
That's
okay. No, and I'm not trying to. Listen, I'm not trying to convince anyone of anything.
No.
But one thing I will say though is so let's take this back macro. What's happening, right? So, and I think that and again, we're getting a little bit far down the path, but we're here. We're doing a deep dive. So. You hold so like in my case, I'll just Canadian dollars, right?
Yeah.
So if I have, let's say $100,000 that I've kept to buy an apartment, right? And the market, and I just for whatever reason I don't buy, right? So a year, the inflation rate right now in Canada is they say is 5%. It's probably closer to like 10, I would guess, because shelter's not like it's insane how the numbers. I don't know why. Yeah. Anyways, so that 100,000 is worth what 90 in 12 months. Because I'm getting nothing in the bank.
Yeah, but if you go in that route, of inflation, then the house price will have gone up.
No, but that's my point. So what I'm saying is in the crypto world, so Mike Novogratz talked about this. He's like, how can these protocols, the ones that aren't scams, do this? Right? And Mike Novogratz, does Mike Novogratz?
Is that the guy? Is that the guy who Keith got in the Twitter beef with last night?
No, so he's an ex Goldman Sachs guy. He has a company called Galaxy Digital, which is going to go on the NASDAQ soon and blow up. Huge. But he was saying, well, how can they do this? Right?
It's a Canadian company, right? It trades in.
Yeah, and it's actually going to list on NASDAQ soon.
Oh, it is, eh? Okay, cool.
By the way, not complete financial advice, but I highly recommend people look at that because I think that's going to be an absolute rocket ship coming out of Quad 4. Cool. Have a look at it. But anyways, long story short, because your capital in that world is because of these risk issues is much more valued than it is in the world of fiat currency where they're printing 40% of the money supply and the government can literally devalue your holdings, right? So as all I'm saying is there's a capital preservation issue that in my view, some of these solutions are speaking to. That's all.
So then do you, I mean, so you consider, Scott, this like the UST, basically a 1-to-1 for your like cash allocations. I mean, like, so like in terms of savings or like a long-term savings account. Yeah.
So one like no-brainer thing for me is that, so I think of things as in two worlds right now. Yeah. I think of one world in which is the traditional financial world, my brokerage account, my interactive brokers. Yeah. And then I think about the money that's kind of crossed the chasm and has gone into crypto world, which unless I need it, is probably never going to leave. So for example, this is a perfect example. So quad 4 is coming in end of December. BTC broke to bearish trend. It's like, get out, take your gains. Well, what do you do with that, right? So in the meantime, it makes a lot of sense, potentially, to me, to say, I'm going to convert that all into UST. And for the next 6 months, I'm going to earn 20% on it.
Got it.
And then as the macro situation changes, I'm going to redeploy,
Sure.
right? Now, as on ramps and off ramps,
but then on the flip side of that, you still have your traditional, whatever, I'll just say TD account or whatever. You got your Canadian bank account, you got your brokerage account, you got your traditional assets still, right? Your retirements, all that kind of stuff. So then in terms of, again, just for clarification purposes,
sure.
Did you consider, I mean, like how are you viewing your crypto assets? Are they like a max 4%, kind of like as a commodity, as like
no,
I'm just saying, but like, I mean, you
so my crypto assets, you can do 4%
you can do 4% across like 30 different coins, right? And you all of a sudden,
So no, I mean, I'm definitely not following Keith's rule on that part. So,
right.
So like I'm somewhere between Raoul Paul saying my entire net worth is ETH and Keith saying like it's 4%. But to Chris's point, because of my Hedgeye view, I trade it like I trade it that tightly,
pretty frequently, right? Okay.
Like, so I use all that and Joe's bridge bands on there for all the coins, like
sure.
But the ability to triage into stable coins is huge, right?
Yeah, it's your way of going into like a treasury, like a U.S. Treasury or some some basically relatively risk-free asset inside of the crypto world. I think there's like two different kind of
what you're doing is you're taking out the volatility.
Correct. Yeah.
That's the way I look at it.
Yeah, sure.
I'm taking out the volatility.
Sure.
So what remains is custodial risk.
Right.
Okay.
Right.
And so that's the part that I'm not trying to, there is custodial risk, right?
Right.
There is, and that is true. There's no doubt about that. There's no FDIC, there's no insurance. So there is risk, right?
Yeah. Yep.
For that, and you do your research, like whatever you want to say. But for me, the trade-off for that risk for the places that I've deployed is so obvious.
Right.
Right. Because I see my Canadian dollars in my bank account being so rapidly devalued that, and when times of high volatility, what do you do with that?
Sure. Yeah. No, makes sense.
Which is maybe we can talk a little bit about quad forward where we're at now. I'm not
sure.
Yeah.
No, I think that's a great segue. Yeah. Because again, Chris, I don't.
So do you hold any? No. Do you hold anything like? So when you say trade, do you trade like whole positions in out, or do you keep anything in cold storage or anything like completely separate?
Okay, that's a really good point. So right now,
and kind of like for basically like a gold bullion, like you're talking about like the cold storage is like the hard physical token,
so it's
right?
off exchange,
off exchange, right? Okay.
So a little bit, to be honest, but not a lot. But one thing I will do, and this is getting even farther down the like, this guy's crazy. Mike Taylor's going to shoot me. Sorry, Mike. By the way, I just want to throw this out here. If Mike Taylor ever listens to this, I would love to have a chat with him about some of the things he said about crypto. Not because I think he's wrong or I want to prove him wrong, but I just think it'd be really interesting. So, anyways, but in all seriousness, so the other thing you do with some of the protocols is you stake the protocols.
Sure.
So, and that is you're getting paid in that currency. So Luna, for example, you stake Luna, and so you've actually put it back into the community pool of capital. Again, it's about organizing capital in different ways, right? It's like, I'm going to give that capital back to the pool and they pay you out. So it's in a very small amount I've kept, and I'm going to stake through. And that's because for me, I'm comfortable that like it's like a tail idea. I put it there. It's not an insane amount, but that's the only exception. And there's some other coins that do that.
The one thing that comes up for me, and for some reason it's especially with Bitcoin, it's and I don't want to call people out, but there's someone like Pomp, right?
Yeah.
Would he be so enamored if Bitcoin had risen? Let's say Bitcoin started at $100 and it had risen $100 plus inflation for the last 10 years.
Like would he be or something?
No, but that's what I'm saying. Like if Bitcoin started at 100, it went up with inflation and now it's $250, would everybody be so hyped?
Well, no.
Because it was an inflation hedge, right? It beat inflation. It hedged inflation.
So okay,
but
everyone. There's so much to say there.
I'm not saying anything. I'm not saying it's all a load of bollocks. I'm not. I'm just saying, would people be as hyped about it if it had beat inflation by 0.1% over the last 10 years?
No, absolutely not. The problem, I think that the thing about crypto is that it is undeniably by the numbers been the best asset to be in, despite it being the most maligned and the most risky asset. And that's.
But when the price is going down, people only bring up all these amazing things about how it's doing all this stuff. And then straight away, as soon as the price goes up, like yesterday, everyone goes back to talking about the price again.
No, listen, and I'm no, and I'm not a maxi. I think the toxicity of all of that, but I think to Robert's point, for some people it is their lottery ticket. For some people, they truly have red pilled, and there's also. Sure. So here's one way I try to explain the different cultures of crypto, and this is in one evening I had. I started out crypto at Microsoft headquarters in Vancouver, and went to a couple bars. And slowly the crypto people went from suits to like basically like the punks. And these were like the people who were like, I hate the establishment, like the government is bad. And before I knew it, we had bought like some cans of beer and we were little underneath in this little convenience store in Chinatown, and they had a little dugout, all the fucking computers. And I'm joking you. And this started out at the Microsoft headquarters. Before I know it, I'm like, are we going to start a riot? Like, I'm not joking. Like, it was insane. And these people are like hardcore anti-government, right? So there's all the spectrums within crypto of all of that. Do you know what I mean?
Yeah.
And that's what you see on the internet.
Yeah.
Oh, for sure.
You're seeing it with NFTs too, right? I mean, you've got like Adidas and Pepsi. I mean, they're getting into the NFT game, right? And they're, bringing in some, basically NFT gurus or like the legacy guys and helping them tweak things. I mean, you're seeing it across the board. I mean, and then now you've got, as you said, the suits, right? Trying to leverage all of the different components of blockchain and incorporating that into their ecosystems without really giving credit to any of the.
Have all the companies stopped putting blockchain in their name now? Is that over? Is that over now?
I guess so.
Because companies changing their name to
because that means your old wall, basically, right? If you use blockchain,
and the other thing about all of this, right, is there's the technology and then there's like humanity. So all the problems of humanity, all the scammers, all the charlatans who were selling snake oil, 200 years ago, they're all, so when sometimes people point out the technology, it really is just humans being human. They steal, they cheat, they rob, some are good, some are bad.
Completely. Yeah.
So,
yeah.
Anyway.
So quad 4. So I know, Chris, you're on mute right now, but how did you guys position? It sounds like you both. Well, I know Scott. You basically transitioned almost everything, or not everything, but like most into UST. Yeah. I know Chris basically sold out and basically took gains back in November-ish time frame, and so yes, I mean, how are you guys continuing to prepare, or like basically kind of prepare for the near term, right? So the near term volatility. Are you trading in and out, right? So like if it, are you still using the risk ranges in terms of like if it hits the bottom, you'll kind of like, you'll again, just like as an example, if it's low under the range, you'll buy maybe not, 100 basis points, but maybe you'll take a stab at 25 to 50 basis points. Or are you just basically out until we have a bit more of a clearer path and clearer skies? Again, right now, saying kind of, call it mid Q2-ish time frame, something like that.
I'll let Chris go. Do you want to go, Chris?
Yeah, I can go. I mean, I've got all sorts of shenanigans going on in the background. But, but
it's the beauty of life, Chris. We're a man of many.
F it, we'll go live.
Yeah.
So for me, just personally, like, going back to talking about Galaxy, right? I won't short crypto.
Oh, interesting.
So for me,
you won't short it.
Yeah. So
Okay.
for me, it's completely off the table. Like to a certain degree, I'm not even looking at it.
Yeah,
it's not like
and Scott, one of the things that for Chris, one of the other key reasons why he got attracted to it is because, again, Chris, I don't need to speak. I don't know why I'm fucking talking for you, but basically it was what
it was a
beginning
gamble.
of the summer, right? Beginning of the summer of 2020.
It was a gamble for quad 2. So I missed that first big huge leg up from like 10,000 on Bitcoin, just using that as a proxy for everything.
Yeah.
That big leg up in November, what would have been November 20? Like I completely missed that.
Yeah.
So then as we got into, I guess, February, I guess it was a gamble, because I thought, right, well, if at the time Darius was still there, so if these guys are saying about how like monumental like this back-to-back quad 2 could be, why not gamble on the thing that's going to go up the most? And whether you want to throw stuff in like no, I won't, but pieces of crap rise. And I'm just saying, like, why wouldn't I just gamble on the things that go up the most? And that was the point. Yeah. So I moved like almost all my capital, but at any given time I could have made a lot more, but I kept at any given time, I still had like 75% cash.
Interesting.
So that 25% was just whipping around everything that was moving like 20% in a day.
Yeah.
And then the other thing for you too, I know because you're in the UK, it was 24-hour trading, so it was a bigger fit as well, right? In terms of it's a
drag for me, like having to wait until. So for me, the US opens at 2:30 and
your kids come home at 3:30.
So that was a big part of it. So I'm used to trading FX. So
yeah. Oh, interesting. Well, so I think one, I think quite frankly, you have more trading experience than I do, and it sounds like you played it really well. So congratulations, first of all, because it's much easier to say it than to do it, right?
Oh, yeah, for sure.
So well done. Just in general, I think that's awesome. So interesting. So I have a good question for you. If like, let's just say, I haven't looked at the latest, but like, let's say we're in quad 1, right? In heading into the summer, right? Would that, like, just to kind of overlay the Hedgeye process, right? Would that give you the thing, okay, maybe this needs to go back on my radar, and I'm going to do it? Sure, or is it just kind of, this was a one-time thing? No, or how are you thinking about it going forward? Because I think that is a really interesting question, like what next, given the circumstances.
A big part for me, and I think I'm not sure whether it was our chat last week, Robert, where I kind of said about this. If you think about the sine curve, I'm kind of happy. Instead of numerical values, so starting at 0 to 10.
Sorry.
Yeah, okay. We'll plug the last.
We'll plug episode 4. Go watch episode 4.
People should go watch that. Yeah, this is what. Like, I'm happy buying stuff. If you're thinking from 0 to 10, I'm happy buying stuff at 2 or 3.
Yeah.
Get into 10. I'll never sell at 10, but get out.
Yeah.
On its transition from 9 to 8. So I guess in a way, because even this conversation about Luna, right? It's like
it's now off his radar.
moving forward, because everything is so fast. Like, there's going to be another Luna by the time we come out of quad 4.
Yeah.
There's so much. There's so many things that you could. It's like there's that many of them.
Well, if you're going to play the macro, there's no need to like get into the individual coins, right?
Yeah.
For sure, and absolutely. So like, I think part of it is like, in a way, crypto is just like a leverage VIX, like inverse correlate, like it's like a 10 times inverse correlated VIX. Like like that's like, I think Keith tweeted it, or like Bitcoin's like almost 0.9% inverse correlation, or 0.9 inverse correlation. So let's not fool ourselves, right? The whole idea that this is some kind of different world, or somehow it's decoupled, like that's like 2012. So anyone who's watching this, That is total BS.
Yeah,
It's
exactly.
not anything.
Well, I mean, and you saw it in the price action, right? I mean, again, it's, I love Keith's point. He's made this multiple times over the last few months, but it's basically, you kind of live by a sword and you die by a sword, right? You want institutions to start, you want institutions to start playing in that space. Well, then you're going to, basically start getting the volatility from institutions getting taps on the shoulder when they have to sell down, a portion of their book or, some of that asset class, whatever it is, because they have to stick by their rules, right? So again, I mean, same thing with, there's a number of different, new sort of companies that are allowing for investment advisors here in the US to play in that space, right? And to have incorporate that into an asset allocation, which to Scott, I mean, to your point, I mean, I think it is, I mean, being able to have that ability, right, to basically make that decision for, as an advisor to either, up and coming, families or, legacy, very high net worth individuals. I think it's very important to at least have that optionality, right? Whether or not you invest in it or you play in that space, that's up between you and your investment, your IA or whoever's, or yourself, right? Between yourself and your partner and whomever. But long story short is, you're still going to get that, right? Because you're going to get, just similar to what we're kind of seeing right now in terms of some of the tech bubbles. They have all been long Apple, Tesla, Microsoft, Facebook, Amazon for years, like, basically buy and hold for the last 5 years, right? So let's just say they buy and hold now, right? Coming out of quad 4. Well, the next time it starts getting choppy, those guys are going to start coming in and just feeding down because, they're not going to want to talk to their, to their client and be like, well, why do we have 10% of my asset allocation towards various, currencies or tokens inside of the crypto world when I'm reading the Wall Street Journal or Barron's and it's telling me that it's one of the most volatile assets out there, right? So it's like, okay, yeah, well, that's because 5 years ago we had a conversation that you want to get exposure to the new world, but now the new world has turned into this, even more volatile than it is today. Now, I don't know if that's going to be the case, but I think it's a very interesting concept to basically, because it's starting to much more intertwine and to be one and the same in terms of, volatility, to your component, like a 10x on the VIX. Yeah, as soon as, if VIX starts going back up to 30, which on the risk range it says it's going to, then it's going to be, this is going to be a short-lived rally.
Yeah, actually, do you want to talk a little bit about the wider market?
Yeah, let's do it.
Yeah. So, well, I mean, this. So we talked about this on the Zoom call last week. So I think this is one of those really interesting periods where I think you have to kind of know thyself a little bit. And in terms of like, so what I've done is I've gone mostly to cash, almost all, like 90% plus cash recently. I had some rate sensitivity. That was obviously a total gong show. Like, let's be real here, right? Like the rate sensitivity call so far has been a shit trade. Let's just call it what it is, right? We're in bullish trend, the 2s and 10s. Now whether or not it turns over. So anyways, long story short, I've kept a little bit of the bonds, like on less than probably about an eighth of a position on this kind of trusting Keith kind of that it's going to roll over, and maybe we're a bit early, just like they were in fall 2018, right? Yep. I know that right. So that's fine. But I think and it's been one thing I will say though, is like, it's been really fun when I have time to short things, like, but you have to have the time to do it. But it's like, I don't know, like one of the nice things about the Hedgeye process is that like you are actually often contrarian.
Yeah.
Right.
Yeah.
Right now we are. So the shorting's fun for me. And I've done a little bit, but the problem is you have to, like Raphael says, you have to really be bolted to the chair to do that. Yeah. And otherwise I'm waiting for things to clear.
And so is this like your first time of shorting?
On a consistent basis. Yeah. And I've lost some, I'm not going to say, but I'm like, I'm now picking the spots that I now believe after 2 years are like high probability.
Yeah.
Right.
What's really interesting about that is, like talking, I've been doing a lot on this whole gamma thing and gamma exposure and all this sorts of stuff. And it's really interesting that everything that drove the likes of GameStop and AMC and all that sort of stuff is like, you've just said it. I'm not saying you were part of that crowd, but if some of these guys and girls start making money shorting stuff, it's like, how quickly can everything flip round? You know, before it was like, oh, we're sticking it to the man because, you know, all these short sellers are getting blown up. It's like, how quickly, when all of a sudden they're making loads of money on puts, it's like, how quickly can everything all of a sudden go?
It's like what look at the short interest. Sorry, the short interest on the stock is less than 1%, right? We got to pile in. We got to pile in.
No, but Chris, to your point, like, I totally get that. Like, Jimmy Runs Money had this comment about like, oh, all the giddy newcomers who are shorting, and I was like, giddy newcomer here, you know. But this is a critical point about why the Hedgeye process is so important, right? Is because we just had this conversation. We have a community where like you're giving your view on what I'm doing, that's going to change my view, right? So like, just talk like really practically speaking, was like, I knew that when, you know, when this last kind of dip happened, that you got your shorts out and there was going to be a big bear market rally to rip your bloody face off. And that's what I'm saying. If you're going to do that, you need, it's like, sometimes these short trades have been like 15 minutes. Like, I've never done that before. I'm literally taking like 1% and I'm out. I have stop losses. Like, but that's because of the Hedgeye process. But I think that you're calling out the kind of the Robinhood crew is critical, because that's what we're trying not to be.
Correct. Yeah. I mean, it's, there's so many of them, right? Where you got to take the profit, especially on the short side, you got to take the profits when they're there, right? And have
really quick,
you know, and almost like, you know, you can have your like tiers, right? It's like, okay, if it hits this level and it's what, I'll just use a round number, 2.5%, you know, a plus 2.5%, aka, you know, 2.5% down from where you're shorted it. I'm buying back, you know, 25 basis points. If it goes 3%, I'm buying back 50 basis points. If it goes 4%, I'm buying back the rest, right? And it's like, okay, have those levels and make sure you're executing, because there's nothing worse. And I experienced this, you know, many times before. There's nothing worse than being right, but then either not having the discipline to take your profit, and then a day later have it just absolutely rip your face off and be like, what the fuck? And then you're covering, you know, and you're down 1 or 2%, right? And you're like, Jesus, my goodness. I was up 5% yesterday and now I'm down 2. Like, how, like, what is going on? And it's
also
really,
so much like Joe talks about this, like the critical aspect of position sizing.
Correct.
Yeah. Right? Like how, like, to make a mistake on like 10 basis points of capital because you're trying to learn about shorting, because at some point you have to play with live ammunition.
Correct.
You're right. So you can't always be scared about being the newbie, because at some point everyone was the newbie that people are making fun of on Twitter. Right?
Absolutely.
So,
but keep it to 50 basis points or something, right? Like, keep
less.
it
like literally like
less.
some of my and Joe talks about this. He's like, you could have the fanciest risk range, rescaled, you know, better than Keith, and still lose all your money. Right? I know you can. And the critical part is like position sizing is so, you know, so anyways.
It's really, yes.
But we're going to have 6 months of quad 4. Where's any alpha going to come? Maybe it's just by being in cash, and maybe that is your alpha, right?
I mean, that's, again, I shared this yesterday, right? I mean, too, like in terms of Twitter, I shared it on Twitter last night. And yeah, I mean, my TLT position is down to like about 3%, right? So like, yes, we, you know, it's been bullish trend, right? And so, you know, that last sort of like dip we had, I think that was last week-ish. You know, I basically took it down from kind of a 6% position and just cut it in half, right? And again, I should have probably gone lower, to be honest, but that's kind of like my min. And I wanted to your point, Scott, I wanted to maintain that exposure, right? Because like, you know, it just see. But on the flip side of that, though, Scott, I'm 70% cash across like 2 retirement accounts and my long short account, right? So it's like, it's, you know, I'm using 30% of that capital to, for the most part, be long of some fixed income, some gold, some, you know, US dollar, and then, you know, it's basically shorts on the, you know, for the rest of it, right? So it's definitely very interesting in that component. And yeah, I mean, you know, Scott, to your point, it's like, it's also a little freeing, right? Just being in cash, because like you although you're tied to those like short positions, the rest of it, you're just like, all right, I'm just gonna let these jabronis, you know, just kind of like figure it out, right? If I miss like a positive day or slight down day, like unless VIX is really whipsawing, I'm not really taking, unless I see the volume again. I'm just like super focused. I mentioned this on our call last week, right? I'm just super focused on the volatility, the volume, and the price, right? So if like the volatility isn't doing much and the volume's down, or vice versa, it's just like, okay, I'm just kind of being much more patient. And that when you covered like a week and a half ago, it's like, yeah, you didn't want to dive back in because you knew, or you had this like process in place where it's like, okay, well, top of the risk range is XYZ, and so it's like I'm waiting for that along with like volatility to be at 20 or 22, whatever it is, and volume to be very to basically be non-existent or very complacent, and that's the setup. You got to be patient, you got to wait for that, because that's the only way you're going to really make money on the short side. Yeah,
it was really interesting. I tweeted this morning about some of these negative gamma events, and for the whole of 2021, there was 16 times that this gamma level on the S&P 500 went negative, and it basically meant so for all 60, so the 16 events, all of them had positive 30-day returns. So i.e. every time it went negative, the S&P was up 30 days after that event. So yeah, there were 16 of them, and the average return was 5.8% or something like that. So basically that was 2021 was the year of buy the dip.
Yeah,
right.
Coming into this year, the gamma exposure on the S&P has been negative, I think 8 times. Now, the first 2 that happened, because we haven't got that far yet to trigger the rest.
Right.
The first 2 have now been down 5.5%. So straight away, 2022 is completely different.
Wow.
So literally 2021 was the year of buy the dip. Every time this random number that people share went negative, you bought and you were up nearly 6% every single time.
Yeah.
30 days later. Well, now there's been 8. 2 have triggered after 30 days, so the 5th and 6th of January. Yeah, and you're down already. So like I shared that, and I've got a chart and I've listed it, and I keep sharing it every couple of days. I'm like, we're 2 days away from this one being negative, and then this one being negative, and it's like, so which? It's like all the things, like with like talking about crypto, okay? When everything's all going up and everything's doing brilliant, lots of people look like they're doing amazing things. And 2021 could be that for the stock market, right? That all these things just came about where everyone who just picked random bits of crap all looked amazing because they just had this huge wave behind them that no matter what, even just looking at the sectors, even the worst sector was still up 14.5% or something.
Yeah.
And then when I share with someone about like the FTSE 100, and I'm like, we're like 12 basis points away from being at the level that we started 2020 at.
Yeah.
Right.
Yeah.
Well, it's just
such a good point.
It's just different. It's different. The US market is different to everyone else, and you don't know it until you look at it. It's like it just has a whole completely set of parameters around why it's doing or what it's doing or whatever else. It's just a complete, like, coming into this year, it's just different. It's just different. And I think
I think that's to your point. I mean, I think that's to your point exactly. I think like obviously, Chris, you have a sophisticated understanding of some of the numbers and some of these patterns that you're looking into, right? And one of the things I think where Keith used to say this a lot, but he doesn't say it as much anymore. But he used to say all the time, like, get your own process, like kind of like you do you, right? Like whether or not it's a notebook, whether or not it's whatever, you need to figure it out, right? And I think part of that is like, if you don't have some advantage, right?
Yeah.
Or you don't have confidence, what are you doing? Like, why are you in the market? Why are you putting your life savings at risk if you're not, probability weighting the likelihood that you're going to make a good decision? Right.
Yeah. It's spot on. Process. It's spot on. And it took me basically about 3 weeks in the end of kind of December going into January to basically get my shit together, right? I had some legacy stuff from like quad twos and anyway, long story short, it was like, Scott, I just was like, all right, McGroarty, what the hell are you doing? Get back to the fundamentals, like get back to your process and just execute. And it's been, again, not to belabor a horse or like kind of, kick it to whatever that saying is, but basically
leave that horse alone.
Yeah, leave that horse alone. Right? Anyway, he didn't do anything to me. But basically, I've gone back to my roots, right? In terms of like the executing and the process and just being like keeping it simpler and just being patient. And that's the biggest thing. And I think, going back to kind of, this conversation around crypto, it seems like that's the takeaway, at least to me, is like, be patient, right? Be patient with when you're wanting to kind of look at the assets again, be patient with sort of, just be patient across the board, right? And leverage the tools that you have and the process that you built. So for Chris, whether it's, what he was doing, or Scott, your process, which was, basically going the quote unquote crypto cash, right? The UST, you're kind of executing the same fashion across your books, right? So across your crypto assets and across your regular assets, you're basically doing the same thing. It's just using different, you're just using different tools or exposures to do that. And I think that's a great, I think that's a great component to your process, and kudos to you, Scott, for basically being able to, one, build that over the last 2 years, and two, to stick with it, because there's many folks out there that haven't been able to figure that out yet and are still bag holding. And I highly doubt they're selling this rip to 44, 43.
Well, no, this is the bounce up to 100K. Didn't you know that? You're not following the right influencers on
that's
crypto.
the one 2 and a half times.
You're doing this all wrong.
Oh man, if that's the
worst
case,
anyways, but the worst is when the guy you followed on, or the influencer on whatever it is on Twitter, as to Christopher's point, which I think is a really brilliant one that I'm going to execute a little bit more. This whole thing about like stand guard at the gate of your mind type of thing, right? Where the influencers are like, oh, I'm buying, and then they're like, Lambo sold 4 weeks ago, and you're like,
oh, interesting. Yeah.
Because that guy's been doing it for 10 years, and he knew, you have to get hurt a couple times to realize what the game is, right?
Absolutely. Chris, I envy very much Scott, because I think he follows like 20 people, maybe 18. So he definitely
I'm down to 16 now, I think.
Shit.
Rob's been cut.
Exactly. I was added to his list. I was cut from a follow. No, but yeah. It's too funny, but it's very important, right? And I'm kind of in a, I have many more that I follow than 20, but it's really important to keep that flow of information so that it doesn't clutter your thinking and your process, and give you, it's really I tip my cap to Chris to keeping it that tight. But Scott, it's been an awesome conversation. So thank you very much.
Thanks for having me.
And we'll definitely have to do this again, and maybe go even deeper into the weeds of some of the crypto components. But I know
I'm going to start Chris an anchor protocol account. And put in $10 and see if he's even willing to look at it. And if he's not,
exactly. It's Chris 45. No, exactly. But Scott, really appreciate you taking the time, and
thanks,
thank you very much. And we'll be at this again next week. But it's a great conversation, and so thank you. And again, I'm just going to plug you one more time. It is learning the process on
so just search it on Google or Facebook. And by the way, there's 3 questions. If you type in one letter, that's it. We just wanted to stop the spammers, so don't just put in one letter, or we'll prove you. So don't worry.
Yeah, exactly.
So that's where I fell down. Then I think I actually gave an answer, but you didn't let me. Nobody let me in. Who's this guy? Who's this weird English guy?
yeah. Who doesn't? Exactly. Awesome, guys.
You knew you couldn't be influenced. Anyway.
Perfect.
All right.
Appreciate y'all. We'll talk soon. Cheers.
All right.